afternoon. This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin. Little b for the currency and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. And I'm your host, Christine Lee, taking a look at our top stories of the day. Tesla selling 10% of its Bitcoin stash for $272 million, the electric car maker revealed during its first quarter earnings call. The sale accounted for nearly a fourth of its total profit in what turned out to be a record-setting quarter. Tesla purchased $1.5 billion worth of BTC in February, adding fuel to Bitcoin's skyrocketing rally. And Bitcoin miners in southern China are back online after a series of coal mining accidents led to outages last week, cascading Bitcoin's hash rate at the same time as Bitcoin's price. Bitcoin's hash rate, an estimate of how much computational power miners produce at a given time, is recovering from roughly 125 exahashes per second following the outages to nearly 160 exahashes per second, according to mining pool API data. And finally, Bitcoin is beginning the monthly options expiry week with a second day of gains, rising from $48,000 to over $55,000 today. Further gains may remain elusive for a while, however, as the max pain point for Friday's 4.2 billion options expiry is $54,000. You can see right over there. Now, buyers of call and put options expiring on April 30th will suffer maximum loss if Bitcoin settles at $54,000 on Friday. Meanwhile, sellers would make the highest profit. Therefore, options writers, often institutions with a lot of cash, may try to and keep prices around $54,000. All right. Trade blocks indexes are now the CoinDesk indexes. So checking in on Bitcoin right now, Bitcoin is trading just below $55,000 right now, according to the XBX index. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
So Bitcoin's recent volatility from an all-time high of almost $65,000 to around $47,000 and then back up again to almost $55,000 has shaken out short-term traders, but long-term holders appear to remain unmoved. This chart from crypto data firm Glassnode shows long-term holders of 1 month or more at the bottom, shown in orange and purple, while short-term holders represented in yellow at the top. In the circles, we see Bitcoin having a bit of a correction in that territory, and that when that happens, we see coins older than 1 month slow in spending, while coins held less than a week see an uptick in spending during the dip in price. And joining us now to discuss is Henri Arslanian, global crypto leader at PwC. Welcome, Henri.
Good. Thanks for having me on.
Great to have you on. All right, so short-term holders are selling, long-term Bitcoin holders are hodling. What do you think is the right play?
Well, often when I look at in a lot of these cases with market movements, I also look at what is the macro events going on. What are some of the big developments? I think one of the topics that's been coming up a lot in recent weeks is really the continuous entry of institutional players. As we saw the last couple of weeks, some of the private banks starting offering to their clients, some more institutional developments. And while there's some, in the short term, some market movements, I think some of these large entry of large players that have access to pretty large pool of the clients themselves could have an outsized impact on the market. And that's some of the areas that I'm following.
You mentioned institutional players entering the market. We saw JP Morgan yesterday setting up an actively traded Bitcoin fund that they announced. Tell me a bit about the significance of that.
Yeah, it was interesting. It was reported actually by CoinDesk yourselves that that's something that the JP Morgan was reportedly looking at. I think, again, this actually brings up the trend that a lot of the private banks will be entering the space. This is something that we've been talking for many months. One thing often a lot of people forget is that there's nothing worse for a private banker than when your client tells you, why can't you offer me crypto exposure? Because bank A, B, C, and D are able to give me exposure, and that puts that bank in a tough spot. So right now that we have a couple of players right now that have made their plans not very concrete, but also very public, I expect many other private banks and other financial institutions to follow over the next couple of months. So I think this is something we should expect to see over the coming months as well.
Interesting. We also heard from the earnings call of Tesla yesterday. They're selling Bitcoin on the balance sheet. What is PwC advising their enterprise clients? Should they buy into Bitcoin?
Yeah, PwC is not in the business of advising clients on the Bitcoin allocation, especially as part of a treasury. That's not a part of the business. But I think what's really interesting to see here is how you're seeing a lot of corporates now obviously put it as part of their balance sheet, right? Like Tesla, Meitu, and others have been some of the early adopters of this. I think some of the things that are important to note there is actually what's going to be the implications on some of the boring items. What's going to be the impact on crypto accounting, crypto tax, reporting. These are some of the items I think a lot of corporates do not think about, but I think this could have quite an impact. For example, what happens if the price of Bitcoin moves, and how does that impact your treasury, how you're reporting this? So I think there's a lot of these elements that any company that's looking at adding Bitcoin to their balance sheet as part of a treasury or any other item, these are some of the things they need to consider as well as part of their readiness and preparedness to do so.
Right. So you're saying, a company like Tesla would have to take into account maybe they'd be taxed, I don't know, around 50% on their capital gains on the balance sheet on Bitcoin. Is that the case?
Well, I think any company that is adding, will be looking at adding Bitcoin as part of their treasury. We need to consider these items. By the way, not because if they're adding as part of treasury, the same applies if they're looking at trading it or offering to their clients as well. For example, one thing that we noticed with a lot of, let's say, financial institutions who've been looking at adding Bitcoin, for offering Bitcoin or crypto to their clients, there's a lot of the practical operational considerations that the institutions need to have. And these are not often straightforward. Think about elements like compliance or operations, frameworks, governance, controls. All of these need to be completely bulletproof before you're able to embark on your crypto journey. But this is not something that happens overnight. You wake up and say, I want to start buying Bitcoin. These are things that are planned and they take obviously quite a bit of time as well. So I think for any institution looking at doing this, there's obviously quite a lead time before you can actually do this.
I wonder, what is your near and long-term outlook on Bitcoin right now?
I think it's going to be interesting. We're releasing in 5 weeks our PwC Elwood 2020 crypto hedge fund report, where we ask actually a lot of our clients what is their prediction on the price of Bitcoin by the end of the year. We ask crypto hedge funds. So I think it's becoming quite interesting. I think what's the feedback we're getting from a lot of fund managers that we're savoring for this report is quite a lot of optimism actually, and I look forward to actually releasing the data of their price predictions in 4 weeks at consensus when we release the numbers. But let me put it this way, as a scoop, there's quite a lot of optimism on the price of Bitcoin and where it can be year end. Okay,
looking forward to that report. At the same time, you are also working on expertise on CBDCs. Where are we in terms of those developments in the world, and can Bitcoin coexist with central bank digital currencies?
Absolutely. It's a great question. I often, the way I look at Bitcoin and CBDCs is they're kind of complementary to each other in the same way that, fiat currencies and gold, for example, complement each other and, have a role in the financial ecosystem. What's been interesting actually with CBDCs is really the increased interaction from central bank digital currencies. PwC, for example, last week, we released our first global CBDC index, where we rank central banks regarding their level of maturity not only on retail CBDC, but wholesale CBDC as well. And this is something we expect to do every year moving forward as well. And as we mentioned by the BIS today, 86% of central banks are exploring the topic. And what came out from our report is really that some central banks are significantly ahead of others. And I expect this the kind of index to create a bit more awareness and probably a bit more activity on the space as well over the next 12 months.
And I wonder how would that exist with Bitcoin, because we see in some countries like Turkey right now, they're banning Bitcoin for crypto payments. We're also seeing some exchanges go under fire here. So, there may be some headwinds in that regard for Bitcoin. What are your thoughts?
Yeah, I think there's two things that are important to note here. One of them is I think a lot of these, you mentioned the case of Turkey, and this is something we've seen in many other countries from the early days of Mt. Gox to recently in Canada and other places. These failures, if, again, depending how they come out, if they're true or not, really report to failures to centralized exchanges, right? So again, they have nothing to do with Bitcoin, but rather some from problems that we've seen at the exchange level. And frankly, these are some problems that any exchange today could be easily fixed. We've seen the case with Quadriga in Canada, where actually regulators came up with a very in-depth postmortem. And there's a lot of actually tools today, from SOC 1, SOC 2 reports to independent reviews that these exchanges can get. And the most important is for users themselves. If users are not asking the exchanges these questions on how they're doing their governance, if they have independent reviews, audits, and all these things, then these things can happen. I think, and users, yes, these exchanges are to blame, but so users have to do their right and the reasonable amount of due diligence as well, as you would for any other financial counterparty you'd be using moving forward.
All right. Henri, always a pleasure having you on. Thank you for your analysis on the Bitcoin markets.
Thanks for having me.
That was Henri Arslanian, global crypto leader at PwC. Coming up, building the bridge between traditional banks and the crypto world.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money at Consensus by CoinDesk. A live virtual experience of leaders, changemakers, virtual reality meetups, keynotes from Ray Dalio, Gary Vaynerchuk, and much more. Get an up-close look at the boom in crypto, the surge of institutional investment in Bitcoin, NFT mania, the breakneck innovation in decentralized finance, and the coming disruption from central bank digital currencies. Join us May 24th to May 27th for Consensus by CoinDesk.
Welcome back. Minneapolis-based U.S. Bank, a wing of America's fifth largest bank, is taking a big step into the Bitcoin biz, unveiling a crypto custody product. It also announced it will administer NYDIG's Bitcoin ETF, which is currently being reviewed by the SEC. This is in addition to its strategic investment in institutional cryptocurrency infrastructure firm CURRENCIES, which closed a $30 million funding round, as announced yesterday. And joining us now to discuss is Patrick Campos, Chief Strategy Officer at CURRENCIES. Welcome, Patrick.
Thanks, Christine. Great to be here.
So, Patrick, perhaps you can comment on the amount of investment and M&A activity that we're seeing from big banks and major financial institutions in the crypto space right now. In recent days, U.S. Bank appears to be making big moves, investing into currency and now establishing itself as a place for institutions to park their crypto, basically. So, stepping back, do institutions get it now? Where are they in the adoption process of supporting and integrating Bitcoin?
Well, I mean, it may be countercultural to say, but I think that institutions, or at least within institutions, there have been pockets of people who have gotten it all along. Maybe it takes a little bit longer within a big organization to, find consensus. And certainly for big institutions, a radical statement about something like crypto is not going to be something that comes quickly. But we, just in our experience, we've worked very closely with a lot of these institutions who have done a lot of work kind of quietly behind the scenes, and some not so quietly. We hear a lot from the likes of JP Morgan and those. But this is not something that's happened overnight for U.S. Bank, for State Street, or many of the others.
Mm-hmm. Who will be the winners in the race to offer crypto services? We see crypto exchanges like Coinbase or traditional players like PayPal and JP Morgan.
So my view on that's a great question. My view on that is that what will emerge are coalitions. And I think this is sort of what we represent in the space. We embraced this amazing new technology very early. But we took a view that you needed to look at the way the world existed, as we find it, and then bring those two together in a way that allows, each side to benefit from the other. There's a lot of, knowledge, obviously, that institutions can bring and so on. And so what I think we'll find coalitions between traditional institutions and, some of these, really up and coming crypto players. We're beginning to see that already.
Interesting. So tell me a bit about CURRENCIES' latest funding round. You raised $30 million from U.S. Bank and State Street. What is it being used for? For a number of things. First of all, obviously, we're working with these banks on really critical POC. So it's really putting together a lot of the plumbing. The approach that we take to it is we're not a blockchain. We make that sort of very clear, but we really unlock the power of blockchain and allow it to interface with existing systems.
So what that means is that banks can actually move in a more sort of aggressive manner toward this space, digital assets, so crypto and digital securities, without having to rip out old infrastructure and replace it. So that's we're using a lot of the funding to really work closely with these banks on on these POCs, but we're also we're standing up our own financial services entities, and we're making a meaningful move into the DeFi space, what we call institutional DeFi. It's not new for us. It's actually sort of the culmination of years of work.
Oh, interesting. Just touching upon that, because can we say that the tech behind legacy finance is just old and antiquated and needs to be just totally trashed and rebuilt again? I mean, I know you're trying to bridge legacy finance with digital assets, but some people say, enough already, let's just rebuild the whole thing. It doesn't work.
Well, I don't think that that's controversial, and I'm certainly not defending any sacred cows here by saying that you're right. And I think everybody recognizes that. The question is, how much time does it take, and how much does it cost to do that? How disruptive is it in the process? And so what turns out is that there's not sort of a one size fits all solution. You can rip certain things out and replace them, wholesale, and other things you sort of have to transition or phase out. And I think that we're seeing a lot of that. In fact, we were speaking with I won't name names, but a very senior person, a very important bank, who said, and I think it was one of the most incredibly humble and yet powerful statements. She said, I spent a long time building all of this, and now I know I've got to tear it down and sort of start over. And in that process, there are some things where I might not emerge the winner. But that's okay. That's where we need to go. And I don't think that that's a message that is really sort of heard, but we hear it. And that's why we're working with a lot of these folks.
I'm just going to take a wild guess. Abigail Johnson from Fidelity. But all right, you don't have to answer that. All right.
No.
You mentioned...
actually have to know that that's not her.
Okay, fine. Fair enough. You mentioned DeFi. How would DeFi fit into all of this with institutions? Are they going to adopt decentralized finance, those old traditional, legacy finance institutions?
Well, they already are, right? So DeFi, as we know it, right, it's a process, or it's a technique. It's not a particular protocol. A protocol may be applying, a certain technique or a certain type of process. But DeFi is already being used, and it's really it is where everything is going. And I think that that's the major recognition. It is where everything is going. The automation of not just business logic, but one of the things that we focus on, compliance, is in fact what DeFi is: replacing intermediaries with technology, with code, really. But you'll never be able to pull the humans completely out of it. Maybe you just want fewer of them and fewer, and fewer gaps there. Right?
Automating the banking system. Patrick, fascinating. I would love to get into those secret, behind the door conversations you're in, but I guess I'll just have to watch the developments as Securrency evolves.
Well, thanks so much, Christine. It's been a pleasure.
All right, that was Securrency Chief Strategy Officer Patrick Campos. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.